And to talk about all this action, folks, we're going to jump over to our man Teddy Kekstadt. We talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's outstanding weekly report, folks, the Tiger Forex Report. You get new issues every Monday, updates throughout the week when warranted. You gain access to an archive webinar Teddy's done. It's $97 a month. It comes with a 30-day money-back guarantee, and it's Fed Day as well. And don't forget, he's got a couple great webinars under the Services tab, folks, capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Teddy's written a book on Japanese candlestick patterns. Both of those, $97 as well. Check them out, folks. Teddy Kekstadt, we got enough going on today. Good morning.
Yeah, the dollar index is all over the place the past week and a half.
Whew, quite the movement in the dollar. Metals reacting, of course. We got markets at all-time highs, Teddy. We got a Fed day. We got the yen reacting. And I was talking to a friend, one of my best friends lives in Switzerland. We can't help but talk about the Swiss dollar in terms of the Swiss, versus our dollar, man. Pretty remarkable. Right. What are you following most in this market with everything going on? Please, what are you looking at?
Well, I'll tell you what. It was a very, very big move from last Monday on the holiday all the way into today, into this Fed meeting. We had more action in the past week and a half than we've had in any month in the past year. So I would be very, very cautious with what's going on. I think you have an over-exacerbated breaking market in the Dixie, and I think you got a rally coming up now. If there's no rate cut today, and especially if the expectations are that there really isn't going to be a rate cut until we have a new Fed chair, I think the interest rates, the yields it's going to be leaning towards the high end, because why wouldn't they? There's no reason right now. We've already had a nice pullback in rates. You have a pullback in the dollar. So I think right now you should have probably a corrective rally, if you will. A breakout to the upside coming up. I think you probably have more bang for your buck on a correction going to the upside than you do on a continuing breaking market for the trend right now with the dollar index. I mean, you've had right, excuse me. I mean, just between last week and this week, I mean, if you look at the move, just last week alone was more action than you had seen in months. And now you add in, just Monday or yesterday into today, that dynamic there for the distance of movement that you've seen it's a lot. So, and I think you've shaken out a lot of your small retail traders over the last week and a half. If you're a swing trader, you got blown out by the trend traders in the past week and a half and that momentum. So, and I would be careful of a liquidity trap right now as far as selling into the dollar right now. As we Davos is over, the Fed meeting, like I said, unless they cut rates, and then even if they do, what's the odds of them cutting rates again until there's a new Fed chairman? Probably zero. So I would say, we'll see what happens at 115. Consensus obviously is leaning towards no cut rather. Especially with what's going on with Powell. Like I said, I think I would be very, very cautious riding this trend right now. I'd look more for a corrective. Normally you want to trade the action, not the reaction, but the reaction here is probably going to be a multi-month reaction, so there's some trade there, I would say. I mean, especially you look at the yen. Look at how the rug got ripped out from that one.
I was going to ask you if you could go to the yen next. I know they're related, of course, to the dollar, but a lot going on in the yen, man. I was reading about supposed rate checks and intervention, and of course the story was their yields spiking to dramatic highs, and now we have it pulling back. Mm-hmm. Does the story line up kind of similar to the dollar there in terms of the move? The dollar you were talking about, it was 4 full points, right? From 99.50 almost down to 95.50 last night, at least in like 9 days. And the yen, I got it up there. What do you think of the yen? Similar line in terms of the movement, or what do you think about the yen right now at 152.67? I got it, dollar yen.
Okay, well, 152.67 is almost close to where the Bank of Japan wants to see the relationship for the U.S. dollar yen at 150 or lower. So the market's pulled back close to that level. I would say that if I'm right, we'll get a correction in the dollar. Okay, so I think, remember we were talking last week about the U.S. dollar yen, that it was probably getting pretty toppy.
I
You don't want to call it top. Obviously, there is it to become one, So, but now we have a gap from last Friday. I see us getting a bounce back up to probably 156, maybe even 157. At that point, I would probably be hesitant to be long anymore. I bet you come back to these lows and see 150 before. I would say sometime between now and the middle of February, definitely before March, that the U.S. dollar yen could be trading right around in a range trade between 153 and 148, probably as we get closer and closer to a new Fed share. Especially because today we had the oil spiked up at our target price to the upside. I really think that the high today, maybe it gets taken out by a little bit, but I don't think you're going to have much room to the upside. I think if anything, you're going to see it fall back to the $58, $57 range. Should it do that, then there's no reason to think that the U.S. dollar yen is going to be able to maintain a rally. So, like I said, I think you're going to have a corrective move with the dollar, okay, over the next probably week or two, after the Fed meeting. And you got to realize, markets go out like they come in. You've had so much of a volatility, intraday, let alone to the downside. I mean, even if you have a 30% correction, on a Fibonacci level up to 0.312, or something like that area, that's not a big correction, So, yeah. I mean, now granted, because of the volatility, like you mentioned, the Swiss. The U.S. dollar Swiss on a daily chart looks like it's had a lot of swing trading, but if you put it on a weekly, you see it's actually compressed. It's very, very tight, So,
pretty cool.
Yeah,
I just went through them. Yep, totally. I had the chart up before he even mentioned it. I was going to ask you. Yeah, it looks like a man on a weekly basis. Look at that, folks. Just a little chop, right? Just a little chop. Pretty tight, narrow range, yeah.
And that's
until last week at least, right?
Yes.
Yeah. Yes. And what do you think about the same deal there, kind of with just an exacerbated move? I was talking to my buddy. My best friend lives in Switzerland, so we can't help but talk about it, man. And just like ours, you traded the dollar, went from 99.50 to 95.50. That's 4 full points. That's like a 4% drop. And you have the Swiss dollar goes from 80 to 76 pennies. Just a monumental move in 8 days. Remarkable.
Right.
Yeah.
Right. So you can see the Swiss probably get back up to 78, 78.5. In that area, which would be right around the lower part of the range that have been chopping in for months, where support becomes resistance. Totally. And I would think that would be a good corrective area. Somewhere you come up into that area, then probably develop a range trade as we start to lean lower, and especially the U.S. dollar Swiss overall on a long-term basis, whether it's a monthly or multi-month basis, it's in a bear trend. It has been in a bear trend for a long time. It's in a breaking market. So you're going to get your corrections to the upside, and be careful with long trades. Definitely the action trade for the U.S. dollar Swiss is to the downside. Short-term, no. I would be careful with that one. So, that one especially, the dynamic. Remember, we've been talking about divergence of currencies. So, yes. Even if we get this correction in the dollar and it holds in a range, I would still see the weakness coming back in on the U.S. dollar Swiss trade.
Pretty awesome. I remember when we talked about parity so often, man. I remember it last time we hit parity, 2022, 76. Teddy, great 9 minutes, man. Appreciate it. Folks, check out the Tiger Forex Report. You gain access to this great insights. Teddy, thanks so much, man. Talk to you next week.